So people have been asking me, how do we trade a crack spread? Okay, no problem. Let's have at this a little bit. All right, so I'm going to keep things real simple. It's a kind of simple as a word I've coined since I started this business. That and of course the hashtag spread 'em. Let's go ahead and talk about what is it for the folks that don't know that trade currently futures, always heard of crack spread and are curious. They're just outright future crude oil guys and gals. It's just basically put this way. If you want to know what the profit margin is for, let's say, a refinery that is cracking oil for to make fuel, you would there's a formula you'd put together, and I'll show you what that is in a bit, and you can see the margin, the profit margin that a refiner that cracks oil to make the petroleum product of gasoline, and you see that margin. You can do the same thing with other petroleum products like heating oil, which really is diesel, which here in my good old Texas world reminds me of my Ford Power Stroke, good old diesel. Now, if I want to know the margin when they're ready to crack 1 barrel of oil to create the amount of gallons that they get out of the output diesel, okay, we can create a crack spread in their simple 1-to-1 ratio crack spreads, which I'm going to show you. And that's how you can determine if refineries are hurting their margin and all that stuff for your fundamental analysis. For me, I just trade simply. I'm going to show you guys a few things here. So looking on the screen, we simply have the RBOB, which is the futures contract for gasoline, and then we're looking at the October spread against crude oil. Okay, so we're looking at 42 gallons of RBOB versus crude oil. Simple. And we're looking at that via a line chart because it's the best way to look at spreads historically over a long period of time, with the exception that I skew the heck out of things inside my trade room, and I make all kind of short-term opportunities, which is a bonus for our personal users. So pretty much looking in the last few years here at pretty much the crack spread with gasoline, where we see that there's a pretty decent range, with the exception of this whole big deal that happened, this sell-off here this last April, the COVID. But if we create our support resistance lines, and in my case they're pretty dynamic, we see the general area of price being somewhere between 8 and 18 bucks. Okay, real simple. But how can we trade this? How can we trade this trade? Or how can we trade heating oil versus crude oil? Simple one-on-one crack spread. We're not using any of the ratios. And there's reasons why too, for some of the guys looking to take advantage of span relief from the exchanges. Some of those ratios don't even have them, let alone they're just a lot of legs to put on. 3-2-1 crack spreads that is a total of 6 contracts in and out. You're looking at 12 commissions, and sometimes the ranges on them ain't going to get you as much as you can get on a simple one-on-one crack spread. So I really want everyone that's getting new to this to learn, simplify, and look at opportunities on the one-to-one crack spread because they are truly expensive anyways. Okay, and we'll talk about that too in a little bit here. So I'm looking here at RBV 2020 times the multiplier 42, because gasoline and heating oil and all the petroleum products, they are measured and they're resold to the retail market, and we know them as gallons. When you go get your gas and your diesel, you're buying it by the gallon. And crude oil is bought by the refiners, by the barrel, and they buy the barrel and then they refine it into, and they can get the 42,000 or whatever, the 42 gallons, I'm sorry, 42 gallons of the component. So the same way that we can basically get the ratio of these two is just always use that mathematical formula. Okay, so, and being of course that your charting provider has the technology to do that, I am using here TradingView, and you need Pro Plus to create spreads. Okay, I use TradingView. We use other platforms to trade off of, and so we get all the beautiful bells and whistles and the incentives to trade efficiently by being diverse with the products and platforms we use. Okay. So how can I trade this? How can I look at some opportunity? What can I do to like really take advantage of a crack spread as a retail trader? As I'm not a buyer for a gasoline company or a refinery or anything. So I want to trade this. I'm a speculator. What can I do? First, let's look at some things in the relativity version, in the relativity view of things. Okay, so if I was to change this contract to just a standalone gasoline contract of October and keep it as a line chart, and I add my comparison of let's say okay, let me just add heating oil. We can clearly see when I do that that there is a difference in relativity, that heating oil is cheaper than gasoline right now, but they're both kind of downtrending because they're still relative markets. Now, heating oil is the ticker, but quite a while ago, it really became um, part of part of the market of transportation industry because technically it is diesel, so it leans in on transportation as well, just like gasoline does. Okay, not just a particular seasonality in winter where heating oil is used in some parts of the Northeast and stuff. So we got to be wary of that. And but anyway, if you're a technical trader anyway, you probably don't care. I don't blame you. Crude oil. Okay, so crude oil is pretty relatively, and they're all pretty relative in relationship markets. Okay, so I've tried looking at situations like this and how do we exploit it? Well, you can go short or long, ETFs. You can go short or long, basically stocks that have options that are relative to these things, and try to see if you can catch a move on a company because the future markets it makes a move most of the time a little sooner. But that's just again not to my interest. What's another way that I can look at this thing? Now, in my technical camp, we talk about and we teach and we build these things as spreads. We look for some pretty good volume spreads. Now, some of these crack spreads might not have the volume, but they lean into the volume of the outrights. And now, if we're swing trading them, you have pretty good dang opportunities in these energy markets over trading crude oil by itself. Let's take a look here. Let me build this out. Okay, so now I'm back down on the bare bone um, gasoline. What I want to do, let me build out. Let's do this, guys and gals. Let's do a heating oil crack spread. So I'm doing heating oil. I'm picking October as the month because it's our current month. 2020. I'm multiplying that by 42 minus crude V 2020, and there I have it. This is just a line chart, okay? A simple line chart of a daily crack spread with heating oil. Aha! But how can I take advantage of that, Peter, on a daily basis and make those $800 and $900 moves like we had yesterday? Hmm. Well, that's a little bit of a something that I usually keep for my members. And how do we put those trades on? Well, let's go to it's a Saturday right now, so the data here is going to be closed, but we can build these things out. Guys, I've been showing you guys for years now how to put these trades on exchange sided platforms, one side order in, one side order out. Now, over here we have, and excuse the grayness on the price letters and on the liquidity here on Saturdays. The Futures Plus account is off. Most futures accounts are. You guys all know that, and it's only open for not for data but for our charting. So if I bring up though just an October, let me just bring up an October ladder. How some of these guys are trading out there. Let's bring up heating oil, October. Let me bring up crude oil. Now it's not going to show you the data, so excuse that because it's the weekend. And the people will trade this way. Have you seen this? I want to buy here and I want to sell there. Well, there's a lot of slippage, honey, inside of this style of trading. Now, if you have to do it, you have to do it. You're still going to pay for two leg spread anyway. One in, one selling, one buying. But you're going to have any slippage on the way that you're doing this order. You're going to have slippage over there. So some of the ways that we can cure that is just put on an exchange-sided trade. Now, if the liquidity ain't there, the liquidity ain't there. But trust me, it's leaning on these two guys. Okay, so you got crude oil, you got heating oil, crude oil, and now you have the crack spread on heating oil. versus crude oil. And if this was open right now, you'd see the numbers and stuff like that. Sorry, I'll have to make another video another day. This is just to help people get a step ahead of the game, understand basically from a simple guy, a simple way to come up and look at a crack spread, a 1-to-1 ratio, crude oil versus heating oil, crude oil versus gasoline. I mean, build up a actual spread platform, look at price with one vision, with one eye, and trade direction and make easier money, okay? Trading these things. And now you'll go to the rest of your life feeling like a professional. Here's the deal. I can help you with the journey and the process. If you have some basic futures experience, and if you don't, you can get it. I can take you from there and guide you step by step with our boot camp on learning how to trade future spreads without killing your pocket. I believe people should be using their money for trading and not for much education. If I did this in volume, I make a difference. We're not out to make 2 grand, 3 grand, 4 grand, 10 grand from people. That's not fair. Okay? This is an online business. With the efficiency of the online business, we feel we have a model and a vision to make things efficient for you too, not just in your trading, but the tools that you get to do it. So therefore, when you come into our course and you subscribe, you get potentially can get that back when you sign up at TradeStation. We have a 100% rebate available, payable back as commission credits. I'll be very transparent and clear on that. We run a transparent business. We wouldn't be partnered up with a brokerage that is a worldwide leading brokerage and platform service if we provided a service that was untrustworthy. Okay, so with that said, too, they will provide you with an amazing award-winning institutional platform that normally costs over $750 to institutes out there. It's a signature platform, okay, made by Trading Technologies, and they will provide this to you. Now, the TradeStation version is called Futures Plus. It's just a white label, just like a ton of white labels that exist out there, guys and gals. And I will teach you via the videos and through our group and personally with myself, not just hiding behind salespeople or something like that, how to actually successfully go through the course, get your trading account set up, go through about 20 sim trades, and then get your butt on the way to making these really efficient trades. Some of the best trades that the champions, the World Trading Cup championship holders, have done via spread trading, if not algos, okay? Which I do intend on doing that on my own the following year. I am going to compete. It's going to be one of the ways I'm going to hold my reputation up on what I do and my passion. So it's a 1-year audit, and all my results will be audited by a group. Anyway, enough of that. The crack spread, ladies and gentlemen, I have a special way that you can see it. You're looking at a pretty simple chart I can have you build. I have the details for it and how you can trade this thing and swing trade the crack spread visually, just like you would outrights, versus sit there and just deal with the frustrating institutional style ways of information that just gets so beat up it just makes people go away. And that's usually after you spend a ton of money to learn it. It's not fair. I don't believe in that. I think that what I do and what I trade out of my own pocket, what I build basically is for myself first. What I see works, I put it on the market. What I see sucks and I don't like it, I throw it away. I can it. And that's my model, and that's my system. That's the way my mentor taught me to work this business and live in this business and survive in this business. So, quick little, sorry about that little sales rant, but hey guys, I'm telling you right now, this is an amazing market, amazing times right now to be trading. Some of these spreads have great expansion too, and so that you can do intraday moves on them or shorter term swing trades. If you don't want to do the longer term swing trades, sitting there trading crack spreads. I mean, who would have ever thought, right? So my vision is that everybody trade these so-called complex spreads, keeping them real simple. Do Forte Trader, come and join us, sign up, at least come log in and check out like a free, a webinar or so. Book a pre-recorded webinar. You will not be displeased. Trust me, what you will get out of it is much more than what you put out up front for this. And regardless, again, guys, You don't have to sign up for anything. This is not a sales pitch. I share this information when I make great discoveries in the market for myself. I share it with the rest of the community. I build by transparency, I build with passion, and that's how, again, we become great and we stay great. All right, then. Everybody have a good weekend.